G'day, Pico Konstantinos here, and today we're going to go through all the things you need to know and do to start buying and selling stocks on the stock market. If you enjoy this content, please hit that like button, subscribe to my channel, and hit that notification button as well, and that way you won't miss out on any new content. Now, the things we're going to discuss today is how to choose a brokerage account to be able to buy and sell stocks, how to set up that account and fund it, and then we're going to talk about how to actually buy and sell stocks on the stock market. Now, there are many quality online stock brokers that you can actually start buying and selling stocks without ringing up a broker. You just do it all yourself. And that's what we're going to focus on today, is being able to manage your buys and manage your sells all by yourself through an online platform. Now, the first thing to probably consider is, what stocks do you want to buy? Do you just want to buy stocks from the country where you live in? Or are you interested in buying stocks from global different companies? So for example, if you didn't live in America or the USA and you wanted to buy companies like Google or Apple or Amazon, things like that, then you'd need to get a brokerage account that enables you to be able to do that. And that could be accounts like Stake or eToro, and those sort of brokerage accounts that will allow you to buy global stocks. But if you're just interested in your own country, which is what I would definitely recommend to start with, because the benefits will be the market's open during the day when you're awake and things like that, so you can be able to check the market. Also, it just gets you to familiar, especially when you're starting out buying and selling stocks. It's really good to be able to do it in your own country. Now, some of the things to consider when you're looking to find an online broker is things like, how much do they charge for brokerage? What do they include? A lot of online brokers include free online charting tools. They also might include research, so research on companies that you might be interested in investing in and things like that. So probably the best way to go about choosing an online broker in your local country would just to do a simple Google search, type in something like best online brokers in Australia or wherever you live, and then read the reviews, read some of the comments. Usually you might write something like most popular or the biggest, and sometimes they're the best ones to go with. So for example, in Australia, one of the biggest online brokers is Commonwealth Securities or CommSec, and they're very large. They've been around a long time. Brokerage is reasonable. There's no point worrying about $5 cheaper brokerage or $10 cheaper brokerage because it doesn't really make much difference in the long run when you're looking to start investing in shares and stocks. So choose an online broker, and then we'll have to set up the account and then put some money into it. Now, setting up your online brokerage account is very simple. You just go through the online site, and you'll fill in all your details, and then you'll probably have to provide some sort of proof of identity, which can usually be done online now. And then basically you're set up once you've provided all the information that the online broker requires. So once you've set up your account, all you really need to do before you can start buying your first stocks is to add some money into that online brokerage account. And that's usually a simple process. You'll go on the site, and then you'll find a link where it'll either tell you how you can put money into it, or there might be a link which might help you do that. So all you have to do is just transfer some money into that online brokerage account, and once you have, then you'll be able to start actually buying stocks. Now, it usually doesn't cost anything to set up an online brokerage account. So if you wanted to set up an account, there's a lot of brokerage accounts that won't require any funding to be able to set it up. And so you'll be able to set it up, and you can even set up what we call watch lists, which is you'll set up the different stocks that you just want to keep a track on. And so each day you can view those watch lists, see how those stocks are going, if they're going up, if they're going down, what's the percentages. You can start looking at stock charts. So start looking at charting just to get a feel for what things are doing. And in your watch list, you can usually add things like exchange traded funds or ETFs. And some of those ETFs will mirror the market. And like I've talked about in other videos, if you wanted to start investing in the stock market in a passive way, you could look at investing into some of those market mirroring or market tracking ETFs. And that way, basically, it's similar to you owning the overall market or the top 200 or 300 or 500 stocks in your local market. And that way it reduces your risk, and you'll basically get the returns of the overall market in general. So there's nothing stopping you setting up an account at any time. It's not going to cause any risk. You can set it up and just start to have a look, get a feel for what different stocks you might be interested in, what ETFs you might want to have a look at, and then start sort of getting a feel for the market and doing your own research. You can look at the online research available or just read on the internet in general what you're interested in. But when you're ready to actually buy something, some stocks or an ETF, etc., then you'll need to make sure you have money in that account ready to go. And that's when we go to the actual process of buying and selling stocks. Now I'm going to go online to walk you through the process of buying and selling stocks. Okay, if we want to do a basic search for an online broker, we could type in something like most popular online broker in the country where you live and have a bit of a squiz. So when we go past the ads, we've got Best Online Brokers Australia. Now you can do as much research as you want. It is good to understand a bit about the online brokers that you're thinking about. But if I click this one, we can see that it gives a summary of some of the ranked best. So you always have to take it with a bit of a pinch of salt, but CommSec here, which is the Commonwealth Bank, it's their trading platform, and CommSec stands for Commonwealth Securities. So we can either visit that site if there's a link, or you can go straight there and then start to have a look around. So CommSec, if you just did a basic search, it'll bring up Commonwealth Securities. So that's an ad. Here's the CommSec site here. So this is the actual site. If we wanted to start and looking at opening, we could hit probably something like join now. It's got a few options, but we're interested in share trading, which is stocks, trading in stocks. So if we clicked on that, talks a bit about it. We can hit the Get Started button here. Alright, so there looks like there's two options here. This one, if you combine your account with a Commonwealth bank account, then you get cheaper brokerage. If not, you're paying a lot more. So I definitely recommend this way if you wanted to use CommSec. And just having a bank account next to your trading account is not going to be an issue really in any way. Are you already a customer? No. Do you have a current bank account with Commonwealth Bank? You might have, and that might save you a bit of time with with your identity and stuff. Are you an individual? Do you want to set up a joint account? I'll choose individual. It gives you an idea of your requirements. This is the brokerage if you have a connected bank account next to your trading account. So $10 for trades up to $1,000 in value. If it's up to 10,000 above that, so between 1 and 10,000, your brokerage will be $19.95. So that means every time you make a buy, if the value of your buy, the number of shares multiplied by the value of the stock that you're purchasing, if that is in between these amounts, you'll pay $19.95 brokerage. And so that'll just get added on, and that's a fee that will go to ComSec as they're providing you that ability to buy and sell. And that also occurs when you sell too. So if you buy, you'll pay that brokerage, and also when you sell, you'll pay that brokerage amount. So you put in your personal details. Once you do that, you'll probably have to put in some proof of identity as well. All right, so I'm not going to go through all that right now because I don't actually want to create a new account, but that's just showing you how to create a basic online broker account. It's quite easy. Every single online broker will have a similar function where they'll run through your details, proof of identity, and then you'll be set up. So go through that, and then we'll go to the next instructional topic. Okay, so you've set up your online brokerage account. The next step to do is to fund that account. So you'll be able to find the details usually if you select something like My Account. It'll show you how to fund your account. So it might give you bank details or a BPay, and you can actually just fund exactly how much money you want to put into the account, and then that will allow you to be able to buy some stocks up to that value. So whatever value you've got in there, you'll be able to buy up to that value in stocks. So first thing you'd want to probably do after you've set up your online broker account is create what we call a watch list. So watch lists are very good just to be able to track any stocks that you're interested in following. So we can create a watch list or view a watch list. So if we create portfolio, no, that's not what we want to do. We want to go to watch lists, and we can add a new watch list here. All right, so we've got our watch list 1, and what we want to do is you want to add whatever stocks you're interested in adding that you just want to keep a track on. This doesn't mean you're buying them, you're just having them in a group so you can just see how they perform. So we might put in Australia, if you know the code, you can put in the code. So there's BHP group. So we might select that and add them. So then that comes into your watch list, and we can add maybe what's some big Commonwealth Bank. So you can start typing in, and as you can see, each different stock has its own unique code. So a short version, and if you know that, you'll be able to put in that code, and then that will allow you to be able to find things quickly and do it that way as well. So another stock, if we go maybe Newcrest Mining, that's a big gold miner. And as you can see, the code for Newcrest Mining is NCM. So that's, it doesn't really matter if you know that or not, but usually if you get used to a stock, you get to know these codes, because as you can see in the watch list, it's just calling them by its actual stock code. Okay, now let's look at, so once you've got your watch list set up with whichever stocks you want to keep a track on, let's look at some of the information that's usually contained in the watch list. So as you can see, we've got our stocks, and we've got the code of each stock. Now, we've got a bid price. So bid price is the highest price at the moment that someone has an order to buy at. So you can see there's a bid price of 53.12. Now the offer price is the lowest price that someone has put in an order to sell BHP stocks at. And there, that price is 53.30. So what that means is, if you saw that during the trading day, so if you saw these prices during the actual trading hour when the market is open, so the trading hours when the market's open, if you were wanting to buy BHP shares and the offer was showing at 53.30, that's the price that you could buy straight away at, because that's the lowest price that someone is offering to sell BHP shares. So if you are desperately wanting to buy BHP shares straight away, you could buy them at 53.30. Now if you had some BHP and you were wanting to sell them, you'd have to sell them at the highest bid price. So to show up the highest bid price in here, and then that's 53.12. So that's the price you could sell your BHP shares immediately at. Now, as you can see, there's a bit of a gap there, but what would normally happen is during the trading day, so while the market's open, that gap for big stocks is usually quite small, and it might only be 1 cent or 2 cents. And then, so there's not really much difference between the buy and the sell, so the bid and the offer. If there was a big gap, you do have to be a bit careful when you are looking to buy, because you might actually buy too high because there's a big gap between the buyers, what they are offering, and what the sellers are offering to sell the stocks at. So other information that the watch list might show. So we've got change here. And so that's what the daily change has been for the stock. So BHP is down 92 cents in this example. CBA for the day is up $1.18. And that represents 1.15%, etc. So if you're watching the watch list, so if you open this watch list during the trading day, it would show what the change is at that exact time. So if you had a look at lunchtime, for example, it would say if BHP was up or if it was down. Same with all your other stocks in your watch list. And so that way you can start seeing during the trading day, is your stock going up? Is it going down? What are the percentages like, etc. Other information is open and high and low. So what that means is this was the actual, for the trading day, because I'm looking at this at night time, so for the trading day, BHP opened at $53.84. So that was the first price traded in the trading day. The high, so basically the highest price it went during the day was $53.90, and the lowest price traded during the day was 53.01 cents. And we've got volume here, and that's how many shares or stocks were actually traded during that whole trading day. Now there might be some extra information, other information that Watchlists can show as well. Sometimes it shows the value, so that 5 million shares that were traded, it might show that that's the equivalent of 5 million times $53.12, which would be the value of the shares that were traded. And that's traded between, so someone bought the shares and someone sold the shares, and that's the entire value. So there's different other, there might be some different information that you can see in your watch list, but that's usually the sort of information that you'll be able to keep a track of without having to make any actual purchases. You'll be able to just keep a track of, and that's what I would recommend when you start. Set up a watch list, have a bit of a look, see how it goes on a day-to-day basis, and then start to get a feel for, is the stocks that you're looking at going up? Are they going down? And start to do a bit of research, and you can really start to get a feel for how the stock market works and how individual stocks can move during the day, after each day, and how they start to move, say, over a week, etc. Now, in one of my previous videos, I mentioned if the first thing to consider when you're wanting to get into the stock market is to consider whether you want to be a passive investor or a more proactive investor. Now, if you did want to just be a passive investor, which means just put your money into a safe investment that sort of mirrors the stock market, you would look at buying some exchange traded funds which do mirror or track the actual market that you're looking at. So here is a list of Australian ETFs that are like index tracking, and you can see the details of each of these ETFs. Here it's got tracks the return of Australia's 200 largest companies. You can see it's got an ASX code, so that's the code we were talking about. ASX just stands for Australian Securities, I believe, Exchange, Australian Securities Exchange. And you can see it's got a management fee. Now, you're not going to actually pay this fee, but what happens is that fee will be charged, and it'll be charged by the group or the company who looks after the exchange traded fund, and it'll just come out of the actual price. So it'll just affect the actual price of that ETF. So as you can see, some of these fees are higher, but there's some of these fees are quite low, like 0.1%, and that tracks the return of the ASX 300 index, which is the most valuable or the highest capitalized 300 stocks on the Australian stock exchange. So that probably there is one of the safest ETFs. It's got a very low management fee. The code is VAS, stands for Vanguard Australian Shares Index. So just say, for example, you wanted a safe investment with limited risk, but would also give you the returns of the general Australian Stock Exchange, then that would be probably a really good option. And you can buy that online through the Australian Stock Exchange. This is the code here, VAS. So what we'll do is we'll put VAS into our watch list, and you could put all of these into your watch list if you wanted to, and then just keep a track on those. And if you were a passive investor, choose one or two, and basically just put money in anytime you've got money, and that way you can accumulate and build your investment in that ETF, and then you should get the returns of whatever stock market you're investing into. So if you're looking at the long-term returns, say, of the Australian Stock Exchange, which usually they would they would look at the top 200 or the top 300 type stocks. Then usually you might get, you know, maybe 8 or 10 or 12% average, and that average smooths out, and you have ups and downs. But overall, if you look at a long time chart, it's definitely okay, so we've got our watch list of the 2 ETFs that track the Australian stock market. We've got STW, which is the top 200, and we've got VAS, which is the top 300 most highest capitalized stocks in the Australian Stock Exchange. Now, if we click on VAS, that brings up a bit of a quote box. So as you can see, we've got buyers on the left side and we've got sellers on the right side here. So the buying bid, top bid is 96.36 and the lowest sell price is 96.44. So if you wanted to buy VAS, and this is how it was looking within the trading day, so during 10 a.m. Australian Eastern Standard Time through till 4 p.m. is when the Australian Stock Exchange trades. So during the day, you'll be able to click on whichever stock or ETF you want to have a look at, and it'll show you the actual market depth or the buyers and the sellers during that trading day. And so if you wanted to sell, you look over on the sellers table or the sellers list, and you can see where all the sellers at. Here we've got 644 units or 644 shares that someone is offering to sell at 96.44. And as you can see here, it's got the number, so that's one person, so that's one order. If we go up one, we've got 602 being offered to sell at 97, and as you can see here, there's 6. So there's 6 different orders that make up that 602. So when you're actually buying, you need to consider how many you want to buy and look at the market depth if you want to buy straight away. So if you were desperate and you really wanted to buy this VAS ETF, so the ASX 300 market tracking, then you'll need to see, okay, do I want to buy less than 644? If so, you can just buy at that $96.44. But if you wanted to buy more than that amount, then you'll need to possibly put your buy order at a higher level if you wanted to get them all together. And what that means is you'd buy 644 at that price, but you'd also buy some more at the higher prices. Now, my suggestion is I wouldn't chase buying. Usually you can just place an order and wait to see if your buy order gets accepted or not. So if sellers will come down to that price that you have put in. So what we're going to do is place a buy order just slightly above the highest current bid or buy order that's in the market depth. So we'll click on our buy button, and all platforms will have some sort of buy button once you're in the actual stock or the ETF. So we'll click buy. And so because of this, the highest bid was 96.36, we'll make our buy order at 96.40. So what that means is the price limit. So we want to put our actual price limit at 96.40. So there's 2 different types of orders. You can make a limit buy order or a limit sell order, and when you do that, it means you specify the exact price that you want to buy or sell at, and that's the only price that you're willing to accept. So it's like setting the price and then waiting to see if that price gets accepted. The only other type of order is an at-market type order, and what that means is they'll look at the lowest sell price available, and they will execute your order at that price. So you need to be more careful if you make an at-market order, because you might end up paying too much for whatever you're looking to buy at. Or if you're selling, you might not get the best price available. So it's quite good, especially when you're starting off and learning. I would recommend just putting a limit price, because that's the actual price that you'll accept. And the stock market, when you're trading, will only execute your order at that price, which is good to know. So we've got $96.40. So you want to put the quantity. How many do you want? So 10 would be about 960. So just say we've got 20. We want to get about 20. That's close to 2,000. So as you can see, it gives you the order value, adds on some brokerage, and gives you our total, and that's the total payable for that trade. So 20 at 96.40. We don't want it good for the day, because what that means is the order will only last for 1 day. So you can do that and replace orders every single day if you wanted to, but it's easier to do what's called good till cancelled, or set an expiry date. So that means your order will last until the expiry date that you put in, or if your platform allows you to put what's called good till cancelled, it means the order stays in the market until it's executed, pretty much. So in this case, this platform wants you to put an expiry date. It shows you the allowable expiry dates here. But a lot of platforms will let you to put what's called good till cancelled. It means your order will stay in the market until it's actually filled. And if it's not filled, it just sits there. All right, so we've put in our order. It's given us a quote for what we will be paying. So if we hit proceed, in this case, it's saying, oh, the expiry date's not within its permitted dates. Looks like this one might be permitted. All right, so it gives you another look at what the total order is going to look like, and then you can submit the order. So it just gives you a another view, and you can submit this order as required. All right, so I'm not going to submit the order because I don't actually use this platform for my own trading. It's just better visually for you to have a look. But that's how you go about placing a buy order. Now, if you own certain shares, you would just hit the sell button and put down how many shares you wanted to sell. So you can only sell up to the number that you have, but you'd go through the same process to put a sell order in your online trading platform as well. So once you've bought some stocks, then you would probably want to keep an eye on how they're going. So you can set up your watch list, and you might set up a watch list with the actual stocks that you own, and that way you can keep track of how they go each day. But most online accounts would also have a portfolio feature, which would show you what stocks you own. Now, in this case, I don't have anything in this account, so it doesn't show any portfolio value, etc. But in your brokerage account, once you actually make some buy orders, you'll be able to see what's in your portfolio. Thanks so much for watching this video. I really appreciate it. I'd love to hear your comments. So if you liked the video, if you didn't like the video, your experiences in setting up and starting trading or starting investing in the stock market. I'd really like to hear how you went. I'd love to hear your progress if you've been doing it for a little while, and just generally getting to know you better. Thanks again, and I'll catch you later.